today's webinar. We're really glad to have you today. We'll be going over some of the things we're going to do today. Just to start, I want to welcome all the panelists. Thank you so much for joining us this very day, and also to every single attendee. We really appreciate you joining us. And as one of the ways where we start this, we like to kind of get to know where you're joining from. So to start with, can the attendees, can you please type in the chat box where you're joining us from? Maybe are you in Lagos? Are you from Kaduna? Are you in Cross River? Are you from outside Nigeria? Just let us know where you're joining in from, and so that we can get to know and meet each other and get running. Lagos, thank you so much, Tori Lope Alfred, for joining from Lagos. The panelists. Okay, thank you, Timmy. Sorry, Fabi from Kwara State. Thank you so much. The panelists, thank you so much for joining. Ibrahim from Lagos, Emmanuel from Abuja. Thank you so much for joining in this morning. Raymond also from Abuja, Victor joining from Lagos. Thank you so much. And Namibia. Atite, Namibia. Oh, that's a first. Thank you so much for joining us. That's the first person joining us from Namibia. Thank you. Deborah from Lagos, thank you. Nonso from Lagos, thank you. Sheyi from Lagos, thank you as well. Where else is there? Mobolaji from Lagos, thank you so much for joining. Just so that we can have a little bit of Williams from Lagos, thank you as well. A little bit of icebreaker. Before this, we know it's almost 12 noon in Nigeria now, and a lot of us might have had meetings, one meeting or the other, just so that we know how busy our day is. Can everyone just type in the number of meetings you've had today? If it's one, put one. If you've never not had any meeting today, just put N or 0. Oh, Tolu Lope has had 2 meetings already. This is the third one for Tolu Lope. Emmanuel 0. Afolabi 0, 0, 1. John has had 3 meetings today. Wow, busy day for you, John. Busy day for you, John. So Samuel 1, Ibrahim 1 as well. So I think we'll just get right into today's webinar. I'll just go over what we'll be doing, the topic for today, and how we'll run today's webinar. I think, okay, Ololade George has had 5 meetings. Izini has had 5 meetings. Sheyi Okunuga has non-stop meetings. Wow, busy day for you guys. Maybe because it's almost the end of the month. Hopefully, you'll be able to rest at some points today. Thank you so much for the answers, and we'll get right into today's webinar. So for today's webinar, what we'll be speaking about funding and financing opportunities towards scaling off-grid solar. We have 3 panelists with us today. We have Unjuwa Ojememi. I don't know if you can put on a video. I'm not sure if I pronounced your name right, but you can put on your video. Then we have Dele Fase. Dele Fasemo. I don't know. You can put on your video as well. Help me with the pronunciation. And Grace Fenton. I hope I pronounced that well as well. So good morning, guys. Thank you so much for joining. Really appreciate you creating time out of your busy schedule to come and speak to us today, and grace us with your, or should I say, grace us with your wonderful knowledge and wealth of knowledge, and so that we can get to know more about the solar industry. So I'll just get right into today's webinar, and to start off, we'll be talking about Arnergy. Arnergy is the one hosting the webinar. Arnergy is situated in Lagos State, with a distributed utility that offers commoditized solar and lithium storage solutions in Africa. Our vision is to provide sustainable solutions to energy reliability issues across emerging markets. Arnergy was incorporated in Nigeria in August 2013 as a limited liability company. Arnergy designs, manufactures, and commoditizes technology-enabled solar microgrid and rooftop solutions, providing affordable, and reliability for SMEs and communities. Our target audience are Arnergy, are businesses in impact industries, including education, healthcare, hospitality, telecommunications, finance, professional services, as well as residential facilities. We are focused on businesses that prioritize energy reliability and efficiency. We also seek to partner with clients that are environmentally conscious and desire to work with us as we take active action to combat climate change and its impact on the planet. So there's this thing we always say in Arnergy, the issue with electricity in Nigeria, with power in Nigeria, is an Hydra-headed problem, and not all of us, no one person can solve it. So we need to come together. We try as much as possible to collaborate with people, business leaders, and thought leaders as well, to help us improve this particular space. And we've been in business for 7 years, like I said. Current installed capacity over 3 megawatts and current storage capacity over 9 megawatts hours being installed. So without further ado, I'll just go into what we'll be talking about today. So we have 3 speakers, like I mentioned. The first speaker will be talking about renewable energy and sustainable development. The second speaker, which is Grace, pardon the arrangements, will be talking about energy financing and why green power matters. And the last speaker will be Daily, who will speak about access to asset financing and consumer credit. So let us meet our panelists for today. So for the first person is Ujua Ojemeni. She works for Energy and Development Finance. She's the executive and founder of Energy and Development Finance. And Ujua Ojemeni. I hope I'm pronouncing it right. Ujua, you can correct me. Okay. Is an impact investing?
Yes, Ujua Ojemeni.
Ojemeni. Okay, thank you so much for that. Is an impact investing energy and development expert with experience in areas of opportunity maturity, financing, and policy focused on driving the achievement of SDG 7 in Africa by 2030, and an advocate for gender inclusivity and equal representation in the energy sector. At the Office of the Honorable Commissioner for Energy and Mineral Resources, Lagos State, she drives policies, investment opportunities, and implementation strategies to deliver reliable energy to the citizens of the state. She's also an advisor with the Private Finance Advisory Network, the multilateral public-private partnership initiative hosted by United Nations Industrial Development Organization, and renewable energy and energy efficiency partnership focused on bridging the investment gap between investors and entrepreneurs. In 2020, Ujua was appointed to the advisory board of the Renewable Energy Association of Nigeria. Ujua is also the founder of African Women in Energy Development Initiative, focused on promoting the growth of women in the sector through mentorship programs, career sponsorship, networking opportunities, professional development, and leadership training for women at all stages of the energy careers and for female students at the secondary and tertiary levels. Without further ado, please welcome Ujua Ojemeni.
All right, thank you very much. Thank you for the introduction. I'll just jump right into it. For me, I think my job here is really easy today because I'm providing an overview of everything related to renewable energy and sustainable development. And my co-panelists will then go and dive deeper into the subject of financing. So I'll just help lay the foundation, explain what the link is, and then let them dive in since they provide financing within the sector. So as we all know, most of us are working towards achieving SDG 7 by 2030, which involves about 5 major things: ensuring we have universal access to affordable, reliable, and modern energy services, ensuring we have a substantial increase in renewable energy in the global energy mix, which is the subject of today's discussion, trying to double the growth rate of energy efficiency in the global energy sector, trying to drive international cooperation to facilitate access to energy, and lastly, really just expanding infrastructure and upgrading technology to ensure that we achieve SDG 7. But I'm sure sometimes people ask, why is this important? Why is SDG 7 such a big deal? Just as a lot of people know, we believe that SDG 7 is the thread that links all other SDGs and all forms of development. So you can look across the sector: health, education, communication, everything, transportation, buildings, everything relies on energy. I mean, there's no life without energy, in a nutshell. And that's why this topic is of importance. Today, we know that access to energy, while there's been improvements across board, we know that there's still a lot of work to be done. In developing countries, we're having improvements, we're accelerating our connections, but we still have a long way to go, with almost just about over 500 million people still without access to electricity. And in terms of clean cooking, the numbers are much worse, at about 2.3 billion people globally. But it's really important that we then narrow down to why renewable energy is key for driving sustainable development. We know that renewable energy tries to replace fossil fuel and is important for both environmental and human reasons, as well as even for creating jobs, ensuring that we have the energy to do everything we need. In terms of expectations and predictions, it's hoped that by 2040, renewable energy would be about 40% of the energy mix. But in fact, there are more aggressive estimations. Just recently, the IEA released a special report on getting to net zero emissions by 2050, and is hoping for about 90% of renewable energy if we're able to actually do some of the proposed initiatives that they proposed in their plan. So it's clear that renewable energy is key to drive development. It's key for our environment, it's key for manufacturing, construction, transportation, it's key to create new jobs, and it's key really to help to drive life as we know it today. But really, individually, and in terms of why we should care about this topic, what are the consequences if there is no access to electricity? We saw recently from the COVID-19 pandemic that energy became critical to be able to run relevant healthcare centers, isolation centers, and to even have some of the resources, clean water, to be able to manage and wash and maintain hygiene during this period, to be able to communicate, especially during this period, for IT, for people to remain connected, given isolation and everything that the pandemic really brought about. So it's important not just for the people involved in the sector, so maybe the Arnergy, Sterling Banks, NITU, but it's important for all of us to improve life and even to improve our own lives. And there are various elements that I will go over just to sort of dimension the renewable energy sector and its impact on sustainable development. There are various aspects I would like to cover this morning. First will be funding, and then we'll look at jobs. We'll look at how energy efficiency and energy savings is related to the subject, the environmental impact, behavioral change, and then we'll look at how policies affect it. Then we'll look very briefly on barriers, because today we're not really going to focus on barriers. We want to focus on what the solutions are, and that's why this panel discussion is taking place. So very, very briefly, in terms of the key parameters, we know that funding, which is the subject of today's discussion, is key to drive access to renewable energy, not just across the globe, but specifically in Nigeria. In terms of the predictions about how much is required, it's estimated that we will need to triple annual clean energy investments to around $4 trillion to reach net zero by 2050. So this is significant, and this requires everyone to come to the table to be able to achieve these goals. But we also know that with renewable energy, there's a lot of jobs that is expected to be created. Currently, and in fact, as of 2019, we knew that about 11.5 million people were employed in the renewable energy sector in 2019. But we expect that to increase significantly with various predictions across board. So for instance, IRENA is hoping that about 5.5 million transition-related jobs will be created over the next 3 years. And in fact, we expect that the RE sector, and specifically solar segment, would and even offers about 3.8 million jobs, which is about a third of the sector. So I think it's very important to keep growing this sector, especially the off-grid aspects. So let's remember that when we talk of jobs in the renewable energy sector, it doesn't just stop at maybe people installing the panels or in one form or the other related directly to energy. It goes into agriculture, the farmers who are able to actually farm better because they have renewable energy and they have sustainable and affordable clean energy to use. Food processing, which reduces food wastage, requires clean energy. And also healthcare, just like I mentioned, and in fact goes on to education and everything else. So when we think of jobs, let's not just focus on just the jobs that would be directly resulting from renewable energy. Let's think also into the entire value chain and in fact the entire ecosystem resulting from jobs. The other key parameter I mentioned is energy saving and efficiency. It's very important that as we try to provide more renewable energy, we actually use what we have efficiently. And that's why it's very important that we use devices that are energy saving. I'm hoping that Arnergy would be able to throw some light or share materials on what devices would be useful to help to reduce the use of energy, especially in buildings. But we also know that renewable energy would be key for electric vehicles into the future in the industries and for commercial businesses. So it's very important to consider all of these aspects, even as we try to push forward renewable energy. The other aspect which I touched on was the environmental impact and climate change. We know that our world is changing, and we know that the world is changing adversely due to emissions. And we know that the energy sector, in fact, emits about 60% of the emissions that go into our environment and adversely impact our environment. So clearly the energy sector has a key role to play in reducing these emissions. And this is good for us, it's good for our children, it's good for our environment. The other aspect I'd like to touch on is the behavioral changes that will be required as we go along with this transition. So it wouldn't just be funding that will be required, or even policies, or initiatives. But as individuals joining this session, for instance, we need to then think of what changes we're going to make to ensure that we, one, reduce the amount of energy we need, but we then even change to more sustainable forms of energy. Are we going to start walking more? Are we going to consider cycling, which is becoming very popular in certain areas? Are we going to reduce our energy wastage, which I just talked about? Are we going to put up devices when we're not using them? Are we going to encourage people around us to use renewable energy? What are we going to do? What part are we going to play? Are we going to start believing that renewable energy is useful to drive sustainable development? Are we going to start believing that solar specifically is able to power our devices? So that's the behavioral change that is required as we go along. And then finally, in terms of policies, no form of development or advancement, whether in the energy sector or otherwise, can go very far without very clear policies and direction from both governments, whether national, whether regional or subnational. So it's important that we then work hand in hand with governments and with the industry to ensure that there are clear mandates and, where possible, incentives to drive and encourage the use of cleaner energy or renewable energy. And then also, very importantly for Nigeria, would be to encourage local manufacturing. That's one of the discussions that's ongoing in the sector to ensure that the funding required and the imports that we require, when we still require them, are actually affordable and are not overly expensive. So it's very important to consider all of these parameters. I'll just touch very briefly on some of the key barriers that we see in the sector and some of the potential solutions. And I'm sure that when the discussion progresses in depth into the financial solutions, we'll cover most of them. The first, as most people know, and that's why we're here, is really financing and having the right amount of financing to drive the sector forward, especially locally. So whether it's low-cost financing, whether it's local currency financing, whether it's the speed to disbursement of this financing, all of these have been shown to be a key challenge to scaling the RE sector. But we know that the likes, various people in the industry like Arnergy have been able to raise financing. So it'll be great to hear from the financiers on the call how more people can access financing, how more people and even customers, users can potentially get consumer financing to be able to acquire some of these useful solutions. The other thing is around the commercial, how commercial is the solution and how do customers believe that they can benefit from it? And I mentioned this before. So really, in terms of customer awareness and customers' belief in this system, how are we going to change that? And how are we going to make the solutions more available and accessible to users? What kinds of business models will be required or do we have to help people, low-income users, for instance, to be able to pay, maybe pay as you go or lease to own, or whatever is most useful. In some cases, for commercial and industrial users, it may be energy as a service where you don't actually pay for the product upfront, but you can pay as you use the service. So all of these are some barriers or challenges that are being addressed, and some still need to be addressed. The third is around the operational aspects of the sector. So things around the skills required in the sector, just like I mentioned around jobs, the complexities around importation, which I also hinted at, and things around the entire value chain. So how do we manage products at the end of their lives? How do we enforce local manufacturing and things like that? And the final one, just as I hinted at, is really how can we ensure that the regulatory framework is enhanced and enforced? So in a nutshell, really, there are barriers cutting across policy, the market, cost, but there are ways and they're being addressed. I'll just touch on about 4 solutions that I believe, and even this workshop will help to emphasize some of those that would help to address the funding challenges we see, and even the challenges that the sector is facing to be able to drive renewable energy to achieve sustainable development. First is really around financing and how we speed up funding disbursement. I think it's important that we sort of have guides or templates that can be easily followed. I know that some DFIs, I believe, are working on some templates, but I'm hoping that the financiers in the sector can then build on those templates and then use it to run, so that financing and disbursement is pretty fast. But I also hear financiers saying that, oh, but sometimes the business is not ready for the financing. And I believe that some support programs would then be useful to help to prepare businesses for the financing. One of those is the Private Financing Advisory Network, which I advise as part of my work. It's really helping to grow the businesses, or helping them to be investment ready, and critiquing their business models and seeing what they need to do, be able to access the financing, just like some in the sector have been able to access. The other thing would really be project development support funding. So how do we then support project development, knowing that sometimes you need to conduct studies, you need to ensure that the market is actually viable, and just ensure that you actually have a business. That's where equity funding comes in. And it's very important that we ensure that we have the right funding for the right tenure in the right form available to cater to this project development needs, which will then help to grow the sector. The other thing I'd like to talk about is really how do we then make the RE sector fun? How do we make it look interesting to people so that it then becomes something that people gravitate towards, just like tech? I think that's something I'd like to hear. Maybe the audience can chip in to say, how can we do this as a sector to ensure that we move the sector forward? How do we create awareness? What would people do, like for instance, at Arnergy, to make renewable energy fun for you, or to make people more interested in renewable energy? And the final point is really around trainings and actually targeted skills training, understanding the transition we're going along with. I want to note that it's not just technical skills that we need these days to move the sector forward. We will need legal, we will need digital work skills, we will need communication skills to move the sector forward. So it's important for the young people, and not only young people in the sector, to understand, okay, what value can I add to the sector, and where can I be of use to the sector? So really, in summary, renewable energy is key for sustainable development across board. So whether it's health, education, our industry, transportation, our home, in every aspect of our lives. And we all have a role to play, whether it's through being better customers, being aware, or whether it's through providing financing, or as businesses being ready to access financing. So really, my charge would be, let's all come together to play our part to drive the renewable energy sector forward in Nigeria for our good and even for the good of our children. Thank you.
Thank you so much, Ujunwa, for the presentation. We really enjoyed that, to be honest. And I like the fact that you said that everyone is, it's an individual responsibility for everyone to try and push this forward. And this gives us an opportunity to do that as well. You have one question already in the Q&A. So attendees can type in their questions already there in the Q&A so that the panelists can answer them one after the other. So the first question is, as a policy maker, what are your thoughts on the country's plan to achieve 30% renewable energy mix by 2030? Do you think it is feasible with 9 years to go, and what innovative approach will be required to achieve this?
Thank you. As we know, given where we are today, those targets are largely ambitious, given where we stand today. But again, I don't like to dwell on the challenges. I'd like to focus on the solutions. What innovative approaches can we drive to ensure that we get to the 30% of renewables by 2030? The first thing I would say is really how can we, one, encourage more renewable energy within our national grid? Today, we see that the focus sometimes is on off-grid, but remember that even people that are within the grid sometimes are not actually supplied adequately. So it's that blend between the grid and the off-grid sector, I believe, would be key to driving forward these targets. Then we move to things like, when we talk about innovation, net metering. I think it's very important, but I don't think we're very close. So when we start considering how users, when you get your own renewable energy system, if you, for instance, believe that it's too much for you, you can then sell to the grid. I think those kinds of innovative solutions are useful, but again, we have to be practical about where we are as a country and what we can do. So still focusing on driving the off-grid sector, have to be financing solutions or business models that sort of drive more uptake at once. So we have so many companies in the industry, but the challenge is that small companies cannot really raise the kind of funding or drive the kind of change we need. So I believe that one thing that can be done is a bigger platform for energy purchase. So whether it's even for the industry to be able to buy the resources they need, whether it's to be able to procure collectively. So I think that collective body, which I believe that the Renewable Energy Association of Nigeria is looking into, would be useful to drive forward the uptake of renewable energy in Nigeria. But I believe that we all have a role to play again. So we cannot keep using other solutions and without considering renewable energy solutions and expect that we'll reach this percentage. So other incentives that might be useful, then it's always a give or take between how the country can get the revenue it needs and how it can incentivize the energy sector. So one would be taxing the use of dirty fuels. Again, we need to make sure that cleaner fuels are available, readily available, and there's financing to get it. So whether it's end user financing before you start discouraging people from using dirtier fuels. And any of the taxes gotten from that can then be used and pushed back to support those at the lowest part of the food chain. So these are some ideas that I have, and I hope that we all work together to continue to push this forward.
Thank you so much, Njua. I like the idea of taxing fossil fuels and trying to increase that. Maybe we don't know how much the price might be if we start taxing them, but it's a welcome what's it called, an idea we can welcome and will drive renewable energy in the country for us as well. So Afolabi Williams has a question. Can you speak more on the support program that is needed to get the business ideas ready?
So typically, investors, and some of them are on the call here, would typically look at key areas in any business before they put their funding in those businesses. So this support program, just like I mentioned, for instance, the Private Finance Advisory Network is also Get Invest. Basically, what they do is to help these businesses to have everything they need to be ready for such funding. I can give just a few examples. So one, who is your team, for instance, as a business? Do you have the right team to be able to drive forward your business or to even give comfort to the investors? Do you have the right people? Do you have a CFO? Do you have a COO who manages things? What kind of skills do they have experience? These are things that any investor would want to see. Most times they're investing in the people, even beyond the technological solution. The other things that you typically want is to have key processes in place as a business. Do you have, for instance, accounts for your business? Have you set up separate accounts for your business from your personal use? Any business would want to be sure that one, your accounts are well maintained, you're not using it for personal use. So for instance, do you have a salary that goes to you, and is everything well documented? If you had to purchase a vehicle, if you had to buy rent, so things like that, just ensuring that your business is well put in place. Then I think another important thing that advisors will typically look at to help to be investment ready would be your business plan and your strategy going forward. So are your plans realistic or are they overly ambitious? Maybe you're planning to grow your systems from 5,000 to 1 million in a year. What have you put in place to be able to achieve that? Do you have the right people? Do you have, are you serving the right customers? So that's when we talk about the business model. So for instance, are you selling a product to someone that, for instance, earns 30,000 a month? Do you expect the person to pay maybe 10,000 a month for energy, knowing that they have other requirements? So that goes to your business model and knowing that you're actually targeting the right customer. So it's a very long list that investors look at and that advisors help businesses to prepare, ensuring that you mitigate all of the risks that are identified and just be sure that you have a business that is commercial and ready to scale and that's actually delivering real impact. So those are just some few thoughts around that.
Thank you so much, Joa. There are loads of questions coming in actually right now. So I'll just move to the next question. And the question is, given that Arnergy has been in the renewable energy industry for close to a decade, what would be your advice to newcomers to the industry to ensure that they are focusing on the right objectives apart from profit making?
I think I've covered this a bit in a previous question, but just to add on this, so it would be to be sure you're delivering impact. So you're just not selling product, but really, how are you telling the story of the impact that your business is actually able to deliver? How many people are getting educated, or how many businesses are now running because of your solution? How many new connections are you able to achieve? How many children are able to study? I think it's really looking beyond energy as a solution, but actually looking at what energy delivers to the end users. I think that would be important. But I think I've mentioned a lot of other things that newcomers to the industry would have to be aware of. Are you serving the right customer group for your solution, or is your solution, I think it's really about targeting the right customers, having the right business model. Are your customers able to pay upfront? If yes, why not? Then go along with that. Or are your customers, after 2 months, if it's a pay as you go, are they now defaulting? So these are some of the things you have to look at. Look at your business model, look at your level of impact, look at your ability to scale, because you don't want to start and then not be able to scale. Look at your team. Just look at every aspect of risk that you face generally.
Thank you so much. Loads of questions for you, and thank you so much for the knowledge passing. And the next question is something you've already touched on as well, which is how do we overcome the social barrier facing acceptance of solar energy in Nigeria? You've already mentioned that we should take it as individual initiatives for us to push it, how we communicate to the next person, the initiative. But I don't know if you want to just speak more to that question, or we move to the next question based off of your previous answer.
Yeah, I think I've touched on it. It's a collective responsibility. But one thing that can be done would also be to actually have pilots or live shows within communities to actually show them that, oh, this is what is possible. And I think some of those Arnergy videos I saw at the beginning are quite useful because they make it quite realistic. So maybe we can share that more and just let people know the impact. So really impact stories, ensuring that the impact is clear to people. I think that would actually help beyond everything else I've said.
Okay, thank you so much for that. The next question from Mudiagaleleji, I hope I pronounced that right, is can you touch on the financing in more details? As most clients understand the merits of solar but are hampered by initial cost of setup.
Again, I think the cost of solar is one thing that has been an issue. But I think again, there are models that are being used to help to reduce the initial setup cost. One, first of all, we know that technology is improving and overall cost of solar energy is reducing significantly and almost coming at par with grid. But the second thing around initial setup cost is where you then have business models, just like mentioned. So maybe energy as a service, where you're actually just providing the energy required, but you're not actually expecting the customer to pay upfront for the asset. And this is where financiers then come in, like Sterling Bank or Nitio, to say, okay, I'm actually financing the energy company who is then providing the customer with that solution. So it's really about finding what model works for the specific customer, but knowing that it doesn't always have to be upfront cost. And I'm sure Arnergy can throw more light on that, because I think you do some of that as well. So.
All right, thank you so much. So the first person that asked the first question has come back with the follow-up question based off of your answer on the carbon taxes. And it says, on carbon taxes, an economy dependent on oil might not want to engage in carbon taxes though, which brings up to give take phrase you mentioned. However, carbon taxes and trading are gaining prominence in regions like Europe. Thanks so much for your answers. So that's basically what the person is saying for your their own idea of carbon taxes. And I really appreciate this person, because when you were giving your presentation, you asked people to give their own ideas as well. And this person has come back to do that as well. Thank you so much, Victor. The next question is from Aremu George. Wow, there are loads of questions now coming in. And the question is, what should be the ideal capital structure for renewable energy firms? Should it be more of equity or debt? That's the first one. Then the second question from the person is, any hope for solar securitization in Nigerian market, especially for lease to own?
So I don't think question one can be addressed on this call. It depends on the business. So it just depends on what stage the business is at any given point. Are you just starting out? Most likely you then need equity, or even if there are grants. Before you get more mature is when you start thinking of debt and what is your inflows and all of that. So this is not really a question that can be addressed. You can't agree on ideal capital structure for renewable energy firms. It would be on a case-by-case basis. The question around solar securitization in the Nigerian market, especially for lease to own. So I believe that some financiers are working on that, and maybe those on the call might be able to touch more on that. But I believe that there's work being done to try to see how solar assets can be used as securities. And I think that Femi would like to also answer that question. So let's leave it for the financiers on board to say where they are with any of those. And Arnergy might be able to touch on that based on the work they do currently.
Okay, thank you very much. I don't know if any other panelist or Femi, like you mentioned, wants to chip in on that particular question before we take the other questions.
I can also suggest that we reserve it, and when they speak, they might even cover some of those. So you can have them.
That's nice. Thank you very much for that. So the next question is from Austin, and it says, good day. As a startup offering renewable service to residential/MSC class, the issue for most prospects has always been affordability and ability to pay. How can a business overcome this?
I think I've touched on this where I talked about finding the right customers for your business model. But again, you also have to check how you're communicating the value you're providing. Because remember, today, a lot of Nigerians already use other forms of dirty fuels that are more expensive. So whether it's candles, whether it's batteries, whether it's kerosene, whether it's diesel, all of these most times add up to be more expensive than any other solution. So are you communicating properly? Have you presented the business case to the customer properly to understand what the value proposition is? I think it's all about being able to identify what value you're providing and then trying to ensure your business model is being able to, is in a way that solves that person's problem. Again, your business might not be for all customers. So I think it's being clear that you might not be able to serve just everyone.
Thank you so much for that response. And based off of all the responses you've given, there's one particular word you used over and over again, which is value and impact as well, which now everything you've mentioned kind of revolves around that. What is the value you are bringing to the customer? What is the impact you're providing? Your stories should go in line with your values. Your stories should go in line with the impact you're giving. So most what I would suggest for all of us now is, how do we now pass that impact story, that value story across to every person coming to us, speaking to us about solar, the person that is using fossil fuel, the person that is using candle, like you mentioned. So just how we can pass that value story across. So the next question is, I think, about policy, and is for Nina. When it comes to policies, Nigeria has made several laudable incentives to promote renewable energy tech in Nigeria. But it seems that some of these policies are not properly implemented by government agencies, e.g. tax incentives and FIRS. How can this problem be overcome?
So again, it's really about continuing to engage with the industry and with the policymakers. I'm understanding that we have policies, but implementation remains a challenge. The Renewable Energy Association of Nigeria, amongst other stakeholders in the sector, keep on engaging to ensure that the policies at every level are well implemented. So I think it's really about constantly engaging and having the right people in the right places to be able to address some of the concerns that have been raised. It's really about constant engagement, because really, if we have the policies, we just need to implement them.
All right, thank you very much. So we'll save the questions now. We have them already in the Q&A. We'll come back to them. But thank you so much. You've answered over 9 questions here with wonderful answers. Thank you so much. We really appreciate it. So we'll come back to you with some of the questions. But now we'll be moving on to the next speaker. And the next speaker for today is Grace Fenton, Director of Go-to-Market Meteo. I think I pronounced that right. So Grace is the Director of Go-to-Market at Meteo, where she leads business development and marketing. She joined Meteo from Frame, where she led commercial sales and drove business strategy for their geospatial data analytics product in Africa and Asia. Prior, she worked at Hendrick and Struggles, a leading global executive search firm. She holds a Bachelor of Science in Culture and Politics from Georgetown University and is currently based in Lagos. So without further ado, please welcome Grace.
Hi, everyone. It's great to meet you and join you on this panel this morning. So wanted to spend a bit of time going into an overview around Nithio and why we created this approach to overcome some of the challenges of financing in the off-grid energy sector. So let me share my screen. Great. So our founders come from a pretty deep experience in the off-grid energy sector, as well as DFIs, financing institutions, and the private sector as well. And as they worked in the space, and the team has worked in the space, we recognized there's a huge opportunity for off-grid renewable energy. And so many of the products exist, and there's demand for those products, but they're not scaling to be able to reach everyone by 2030 to achieve universal energy access. And out of the 600 Africans across the continent who don't have energy, almost half of them have the ability to pay for the products that already exist in the sector. And so there's a huge opportunity to continue to grow and scale access to these off-grid energy products, which have wide-lasting implications for universal energy access, quality of life, and then also climate change mitigation and adaptation, right? But there's a big challenge when it comes to financing. And so operators, especially in the PAYGO space, there's a breakdown in understanding ability to pay and repayment rates. And this is because PAYGO is a very innovative and incredibly useful financing structure. However, because someone could pay for 2 months and stop for 6 and then pay on that 7th month, does that mean they defaulted? Does that mean they're continuing to pay? What does that mean for the cash flows of the distributor in the off-grid energy sector, especially solar? And so because there's a lack of understanding around those projected cash flows, that's translated to the investors. And so the investors, if the operators don't have a clear sense all of the time, that translates to investors who struggle to be able to understand how to structure their financing. And so this has implications for the financing that's reaching the sector. So this is a graph that you can see there was a huge increase from 2013 to 2015 in financing to the off-grid solar sector, which was really exciting. And I think the sector really thought that would continue to double, even 2015 to 2016, a big jump. But then over the last 5 years, the money flows to the sector have stalled around the 350 million mark in USD. And so what's really needed to achieve this universal energy access is billions of dollars, I think 25 billion per year to really achieve this goal. And so we're really nowhere near close on the financing side. And so Nithio identified this issue, and that's where our innovative financing approach has come into play that can get into a little bit more. So Nithio is an AI-enabled energy financing platform, and our mission and goal is to drive billions of dollars of investment to achieve universal energy access by 2030. And so what this looks like is investors will understand end user ability to pay and therefore be able to understand and mitigate that risk and plan accordingly. Companies will be able to scale. And so this is small, medium, and large companies. So at the moment, about 90% of all of the funding, so of those 300 million, 90% goes to the top 10 companies in the sector. And I think even within that, the top 3 are really are getting all the financing. And so to be able to achieve all customers, including last mile customers, all companies must have financing despite their size. And then we must match the right capital to the right organization. So yes, the financing on the private company side is important, and then also what subsidies could look like in order to achieve the last mile. So what that looks like in practice is we work in a few different ways. And so we have our own financial intermediary, Nithio FI, where we distribute debt investments to companies in 3 markets at the moment. So Nigeria, Kenya, and Uganda. And so if you're a distributor, would love to chat more. We have obviously a close partnership with Arnergy, and if you work with them, please feel free to reach out and we can speak a little bit more about the financing component. And so a little bit more about the financing is that it's driven by a risk analytics engine. So whether you're borrowing from Nithio or if on the investor side, you're investing in Nithio, everything we're doing is powered by our risk analytics engine, which I'll get into a little bit more. But it was really created to address that issue around understanding end user ability to pay and forecasting cash flows and repayment rates. So the risk analytics engine powers our FI, but we also work with investors to help them conduct their own due diligence and portfolio monitoring as well. We see this as a really important step within the sector to work with other institutions, even if they're lending and might be considered kind of competitors in the space. We really seek to have close relationships and bring the standardized approach to understanding credit risk. So a little bit more about what the FI looks like is, so we recently announced the initial close of the FI to be $23 million US. And we're looking to double in size by the end of the year. And like I said, we're focused on 3 countries, but continuing to grow. And then our innovative kind of product is especially the receivables backed financing. So that's something to continue to discuss and would love to get feedback on. And we also do inventory backed financing as well. So looking to scale this quite significantly over time. And we've done 2 investments initially before kind of the initial close in Nigeria already, which especially leveraging our risk analytics engine was really powerful for our own investments because we had started those kind of right before COVID. And the analytical approach helps us to understand what the sector, what customers look like, and to be able to account for extenuating circumstances. And so that's a quick overview of the FI Happy. If you have questions about it or what the financing looks like, if you drop them in the chat, but can go a little bit more into our risk analytics engine and what that looks like. I might actually show a demo of the tool and what it looks like in practice. I think it's a little bit more interesting. Great. So what this looks like and how we're able to leverage this kind of, as I said, AI-enabled approach is we incorporate data from operators or distributors we work with. And so we use their anonymized CRM data, so we don't use any personally identifiable data. And so we incorporate the CRM data, so it's repayment rates and a customer ID, and usually a geolocation and point of sale. But then we integrate localized geospatial population data characteristics. And so these are things around ability to pay, consumer power, employment, education. This is localized down to the 1 square kilometer, what we consider the neighborhood level. So we use those as inputs into our AI models. Basically, you could think of it as training data. And we use, and then the output we use in our own due diligence approach. Or we, like I said, work with other investors on their due diligence and portfolio monitoring. But what that looks like in practice is we're able to start to get a clear sense of how distributors are working, what's going really well, and then what are some things to flag. And when we work with distributors, we share this dashboard with them. And so hoping that's helpful with their own kind of operations as well. So you can see here, we map out account statuses. And especially in PAYGO, it's really, everyone's definition of what an unlocked, enabled, or disabled account differs quite a bit. And so we bring kind of a standardization to understand what the proportion of total number of accounts are active or disabled after a certain amount of time. We can also look at product breakdowns and understanding the outstanding receivables in terms of financially, but also percentage of portfolios by location. So this is by different countries, but you could also do regions within a country, for example, to see what areas are performing well and which areas you should, are a bit more investment is needed. And then this is the risk segments, is where these different data inputs become really powerful. And so we're able to work with a distributor and segment their end users or their customers based on their risk in terms of repayment. So you can see here almost half of their portfolios in a fast repair, which is great. And then it's helpful to know what that proportional breakdown of slow or moderate repairs are. And so a moderate repair might be someone who pays every other month or takes a few months off, but continues to kind of pay steadily. And then slow repairs are really kind of the first example of using maybe a month and then off for 5 months and then another. There's not anything inherently wrong with any of the risk segments. This isn't supposed to be a negative kind of credit assessment at all. It's more to give a sense of what those anticipated cash flows could look like. So here you can see we can start to map what those repayment trajectories look like. And you can see after the expected contract term elapsed, so after the 2-year mark, all the fast repairs basically pay. It takes the moderate repairs about 3 years to really get there, but the slow repairs never really, less than half ever really repay. And so that has implications for the paid cash flows and what that looks like, and implications for the liquidity of a distributor. So here you could see what this looks like in practice is the contracted cash flows. And as we know, the contracted cash flows, because there's a proportion of moderate and slow repairs, won't actually account to what is actually contracted. So Nithio uses these data inputs and then AI to forecast out what those predicted cash flows will actually look like. And you can see at this part, they're much lower than the contracted, but actually over time, they're higher than the contracted amount is anticipated. And that's really, I think, especially contributes from the moderate repayers who are slow at the beginning, but do end up getting there, right? And then when we overlaid what was actually paid, it lined up quite well up until the point that it stopped being collected. And so this is an example of Nithio being able to get a clear sense of what the cash flows look like. And on our end, it helps us inform financing structuring. So we use it as inputs for our advance rate, understanding kind of the tenor that we want to think about, the size of the debt investment. And then that helps us avoid potential default or restructuring, which is very costly. And it's costly on both ends, right? You know, that's not an ideal situation for the distributor or for Nithio or other investors we might work with. So overall, Nithio's goal is to bring a data-driven approach to get a clear sense of what's going on, what the potential risks might be, and to be able to, on our side, be able to structure accordingly to mitigate and work with other investors to do the same, all in hopes of driving kind of increased investment to the sector. So it would be great to get any questions. I saw a few came through. And the last point to kind of mention is, so as was on the slide of how we work in a few different ways. So we work and distribute debt investment, but then we also on the investor side work with banks. So our investments, our debt that we give is in US dollars, but we're always looking to partner with Nigerian banks or other locations where FI is working to do local currency financing. And so we've chatted with quite a few around how we can bring dollars, and then the bank can, kind of do a pass-through and work in collaboration to do the investment in Naira. So when it comes time to repay, it's much easier for the operator or the distributor to get Naira. And so it's a little less stressful on that end, because I saw there was a question around hedge against currency risk. So one approach is the local currency financing. We have some also partnerships with, players that work in the FX space, but those are the two ways we've thought, especially with fluctuations in Nigeria.
Thank you so much. You've already picked the first question for you, actually. Thank you so much for the presentation. Really enjoyed that. And it was really nice seeing your tool, how it worked, and how you were using that to classify customers. And based off of that, the next question is actually based off of the presentation. And the person says, what categories of customers are the fast payers, slow payers, and the moderate repayers?
So just making sure, understanding, okay, yeah. So how we segment customers is, so we have we have repayment history for a subset of customers. So because we're using AI models, we don't, what a value of using that is, so the sample size we need from an operator or distributor is quite small, actually. So long as the distributor has worked with 100 or 200 or so customers, we can have a clear sense of what some of the patterns are within their portfolio. But then we match those repayment rates up with that geospatial data I mentioned. So that has household characteristics that span education, employment, what they spend on a certain basket of goods, spending power across the board, etc. And because we match those up, that gives us a clear sense of what the household level kind of characteristics are, and allows us to segment. And so then that's how we can start breaking it down based on certain characteristics, whether they be socioeconomic, and in coordination with the repayment data as well, to be able to forecast. But Patrick, does that answer your question? I want to make sure. But
Patrick, you can just type in yes if that answered your question. Okay, yes, it answered yes. Thank you so much, Patrick. So the next question is from Victor, and the question is, thanks for your presentation, Grace. The yearly funding trends chart that was shown earlier, kindly confirm the region the chart is for. Is it for Africa? That's the
Yeah,
first.
yeah. So it's a great question. The trend is actually from Gogla, and it's all of the regions that they watch, which means that the investment, I think a lot of investment does go to Africa, but in general, much more is needed on the investment side to be able to achieve universal energy access in Africa. Because the 350 million range is, I think, Gogla's numbers overall for the regions and areas they track.
Thank you very much. So the second question is, how does Meteor handle the possibilities of customer defaults, especially for the slow repayment category?
Yeah, it's a great question. And I think with our approach, that's why it's powerful, because you have to always assume, right, someone will default, and that, especially with the pay-go nature, it fluctuates in general. And then people might, you might think they'll repay or start to pick up again, and then people will default kind of completely or in entirety. And so being able to bring kind of this data-driven approach and being able to understand what percentage might default is helpful for us to be able to understand what that level of risk looks like. So I think we're always anticipating to see a certain proportion of slow repayers, but it's just how big is that proportion of slow repayers? And then kind of what is the trajectory? Slow repayers and for different companies might have a different time range. And so what does the slow repair category timeframe look like? And then how can we mitigate, or how is, like, when we're working with potential borrowers on our FI side, what is the overall kind of business model? What are their other factors? What is their structure, and how do they think about some of those things to be able to mitigate for some of those risks?
Thank you so much, Grace. The next question is from John from Kenya. Thank you so much, John from Kenya. I think we have Namibia, we have Kenya. I don't know if there's any other location across Africa. You can just type into the chat box. But John's question is, do you offer financing for C and I customers? And what is the model like?
Yeah. So right now, our data is really based at the household level. So we work across the board, anything you could kind of think of with a household component. So we do SHS, we do productive use, which is going to be one of the biggest tools for climate mitigation and adaptation. We do even appliance financing, for example. So if it's hooked up to a mini grid, but there's a household kind of appliance financing component. We also look at microfinance institutions that have an energy component, as well as agribusiness. So trying to be inclusive of smallholder farmers and micro entrepreneurs. At the moment, based off that, we don't do C&I, but I think that might change in the future. But right now, could think of us as anything with kind of a household energy component.
Okay, thank you so much, Grace. So I think there are two questions that just come in. One came into the chat, and the current one is also from the previous question as well, which is about local currency risk. And I think you've mentioned that as well. Just to iterate what you said before, is you provide investment based on USD, but you can also provide factoring on local currency so that the businesses can pay back with the currency they can easily access. So I think that should answer the questions for them. The next question is from Mugaji. I'm not sure I can pronounce that, but let's just go to the question. If I understand you, financing is available to allow pay as you go and for pay as you own. I think that's what the person said. So please confirm, how can you be contacted in Nigeria for further information?
Yeah, definitely. Would love to chat more. Exactly right. So definitely includes pay as you go and pay as you own. I can drop my email in the chat, and feel free to send a note, or if you work with Arnergy, reach out to them and they can connect you with me as well.
All right, thank you so much. So we have, okay, so we'll take two more questions before the next speaker for you. So for the next question, Aremu George, I think Aremu George is a financial analyst or is in the accounting sector or financing sector. And the questions are very interesting. And first one is, do you reinsure receivable financing with local or international insurance company?
Yeah, so we have kind of relationships and partnerships with organizations that do guarantees. So if that's something of interest, happy to chat more about it. We don't personally do the guarantees or the insurance aspect, but similar to how we can work with local banks on local currency financing, we can work with other organizations that do guarantees. So happy to chat more if you're in that space as well, or if it's just something of interest.
Okay, thank you. So so the next one is, how do you price $1 receivable, for example? Is it similar to debt factoring?
Yeah, I mean, in general, we'll look at the receivables pool based off of kind of how the organization prices it, and then industry standards and norms, because we work with other operators or distributors. And so that, I think that's a high level, but happy to chat a little bit more offline about how the pricing of receivables works on our end.
Okay, so the final question from Aremu George is your inventory financing tied to specific suppliers?
No, so if we're working with a distributor and they have a specific supplier that they're working with, then we can jump into the conversation and get a sense of what that looks like. We're mostly focused on receivables-backed financing, but there are certain cases that we'll look at inventory financing as well.
Okay, thank you so much. So the last question before we move on to daily is from Zara Abba. And Zara says, thank you for your presentation. And the first question is the customer data continuously updated to reflect changing risk levels?
Exactly. Yeah. So we will continue. So we'll plug in with the distributor if we're doing an investment or working with another investor. And part of the structuring is we'll do an API or a data transfer monthly or quarterly to make sure that data is updating. And then the geospatial data, the population characteristics, a lot of those don't change over the course of just a few months, right? Someone's socioeconomic qualities don't jump really, huge in just a few weeks. So we update those accordingly, not as frequently, but especially on the distributor data, we update that quite frequently.
Okay, thank you very much. So the last question is, do you then adjust the cost of capital based on the changing risk levels?
Definitely, yeah, and that's one piece of our financing that the data-driven approach really helps us be able to offer, because we have the analysis, but also we're getting those updates. It allows us, so if then all of a sudden, repayment rates are going faster or a bigger, you're getting more and more customers and they're actually on the fast repair side, then we can definitely adjust the financing structure to make sure it fits that.
All right, thank you so much, Grace. Thank you for the response. Thank you for the presentation. We really appreciate it. So for the two questions that just came in and the one in the chat, we'll still go back to your questions. We'll have them down documented already, but we want to move to the next presenter now. And with that, let me just go ahead and introduce the next presenter for us. And the next presenter today is Dele Fashemo, the Group Head of Energy at Sterling Bank. He has over 20 years banking experience across corporate and investment banking, infrastructure and project finance, treasury and asset management, and banking operations. He has a bachelor's and master's degrees in economics, MBA, alumni of Harvard Business School General Management Program, and Lagos Business School Advanced Management Program. Currently Group Head of Energy for Sterling, overseeing oil and gas, power, and renewable energy. Without further ado, please welcome Dele Fashemo.
Thank you very much, and thanks for having me today on this webinar. Very interesting, and I thank Uju and Grace for the excellent work and the foundation that's been laid for the conversation. I think in the next 15 minutes thereabout, I'll be speaking to access to finance or access to asset financing and consumer credit within the renewable energy space. We have a lot of things to speak about essentially, but I think I would like to use our everyday language to break this down into, sort of bring it from the high level so that we can all relate to exactly what we're speaking about. As a matter of fact, energy is something that we relate with on a daily basis. Before I go into the specifics of what access is currently and what is impeding and what we can do and the various offerings that are available, I would like to just, sort of remind us of, what the journey has been in another sector that we all seem to be familiar with, and that is within the telecom space. And the reason I'm doing this is for us to cast our minds back to some 20, 21 years ago when the GSM revolution, for example, was about to start in Nigeria. Before that, we had wireline telecommunications facilities, and that was all that was available, of course, with very few, what we used to call not a few very elitist sort of mobile telecom service that was available. And that was the only way you could get, telecom service at that time. But then something was happening globally that a lot of us were probably not paying attention to, and then it came into our own environment. And when you begin to see changes, structural changes within the ecosystem, and the countries and companies that make certain kinds of products are seeing a different economics or economic value in another sector, what that means is that there is going to be disruption, and then the product that everybody is used to will no longer be available. In my view, I think in a few years' time, again, depending on how aggressive or optimistic each person is, within a certain horizon, you spoke about the net zero timeframe to 2050 earlier, which is very correct. But what that conversation tells me is that in the global economic space, those who are supporting fossil fuel energy sources, whether at multinational company levels or at multinational government levels, are beginning to change the narrative. And there is a transition plan even around financing that sort of suggests that financing will gradually be withdrawn from fossil fuel type projects, and then a lot more capital will begin to go into renewables, far more than what we have seen today. What that means is that at the corporate levels and for industrial users, what is available for you to generate energy, there is going to be a structural change within the market. So when that happens, it will no longer be a question of whether you like it or whether you understand it. It will now be a question of what is available. Today, if you want to get telecom service, you're not going to wireline service are no longer. When we moved away from wireline services and we had the fixed wireless services, I wouldn't want to mention any specific names, but some of us would recall that there were two prominent names in fixed wireless services at that time, running on the CDMA technology. The moment the ecosystem changed as well, and manufacturers were no longer making the handset, for example, mobile phones that were compatible, especially within this environment. Those services only disappeared, and all you're left with is your GSM services. Now, why did I go back that lane? Is because today, there's this revolution going on within the global space that within our own Nigerian environment, we do not seem to be fully aware of yet, at least not at the scale that is desired. I mean, there is a lot of conversation going on as we're having today, very few pockets of intervention from, not even at all state government levels. Lagos State government is doing things, Arnergy is doing, Sterling is doing, but we are going to get to a point where it catches fire, if I can use that. And why do we have that sort of pushback and resistance in our local environment? We're used to subsidies, whether subsidy on petrol or whether subsidy on the grid power that we currently get today. And because we're used to subsidy, we tend to then begin to interpret the cost of renewable energy as exorbitant and expensive, right? But the truth is, with the gradual withdrawal of subsidies on all of these different sources that I've mentioned, you will see a convergence, and that convergence is happening right now. We knew how much we bought PMS last year. We know how much we buy today. We know what the real price should be today, actually. We know how much we paid for grid power supply in 2020. We know that depending on your consumer class, you probably are paying 100% more than you paid in a year ago today. This transition is going to continue. And the reason I'm sort of bringing our minds to all of this is for us to know that these events would happen, and it's going to get to a point where nobody can control the transition anymore. When it gets to that, what we call in business, a tipping point. And there's going to be further increments in energy from the grid and further increment in the price of fossil fuel generators. Devaluation is happening. All of these things are going to happen. Now, that's the sort of introduction that I wanted to give to lay the basis on the foundation for the appreciation of financing, particularly when it comes to entry cost and implementation costs that today we still describe as expensive. But the truth is, the fact that people can still get energy from the grid and it appears to be cheaper, it's one of the impediments that we're dealing with. However, one of the narratives that we keep pushing out is not only the fact that other sources of energy will become incrementally expensive, but the fact that in the actual sense of it, it's not cheaper to power your business, your small businesses or your home with diesel-powered or petrol-powered generator. It's not less expensive than you acquiring a solar home system, for example. Because in addition to your acquisition cost, you've got to think about the fact that you would, on a going forward basis, have to buy either petrol or diesel. On a going forward basis, you've got to maintain the system. You've got to change parts. And if it's a large-scale industrial use, for example, there will be pilferage of your diesel. I mean, that's why I said this is using an everyday language to explain and break things down for us to understand why we need to adopt renewable energy, particularly the one that is readily available in our market today, which is the solar home system. The second problem, in addition to the fact that we tend to think about the alternatives as cheaper, is that there is, the level of awareness is not at the level where it should be today. And I'm very happy that we're having these sort of engagements. In Sterling Bank, we engage the market all the time, grant press interviews, we participate in webinars, summits, and conferences like this to sort of create the awareness of viable alternatives, particularly in renewable, especially within the solar home system segment. And it's not only for the home use or domestic use, as well as for commercial and industrial. Today, there are banks, there are filling stations, there are hospitals and schools who are going off grid. There are homes that are going off grid, and they're powered by solar solutions. So that is the second level of impediment that we really need to deal with when it comes to, creating the awareness and letting the ecosystem expand for consumer credit. Of course, most everybody's spoken about, financing as a challenge. And we do recognize that financing remains a challenge, but it's being cracked. We're happy to say that in Sterling, we're leading that conversation, and we're not just speaking, we're putting capital behind it. The sort of convergence and partnership we have with Arnergy goes to show what we are doing to ease the financing. To break financing down really is in terms of amount that is available, in terms of the interest rate that lenders typically would ask for, in terms of the tenor over which financiers are willing to provide financing. All of these within our environment, within Sterling, we've sort of dealt with. And we would not say that we have arrived at a destination. Far from it. As a matter of fact, even though what we've done is way out of the market, we're still, some distance away from the destination that we want to go to. So today, working with us and working with Arnergy, who could refer customers to Sterling for financing, you could get your solar home systems financed for up to 48 months in some cases. You could get sub 20 interest rate, depending on your economic capability. And of course, we do not today ask for external collateral anymore, whether we're financing solar home systems for domestic or productive use, or whether we're financing commercial and industrial installations. We sort of relax some of those conditions in order to ensure that a lot more people get access to financing from the solutions that we have. One other problem that we have seen, practical on the field experience, when it comes to solar home system, is to interest you that it's the challenge with landlords. I've personally spoken to, and my colleagues would also bear witness to that there are a number of people who are willing and quite interested and may even be able to afford to buy outrightly. But if they do not currently live in their own, in an owned apartment, if they live in, say, a block of flats, again, everyday language, some landlords are refused to allow their tenants to put solar PV panels on their roofs. These are engagements that are going on, and I think all participants, including ourselves, Arnergy, and everyone, has got to be involved in this conversation. And I'm happy that Uju is here today, coming from the Ministry of Energy in Lagos State. So policy advocacy, awareness, I wouldn't say regulation, so that we do not appear as compelling people, but these are real everyday impediment that is actually stopping or slowing down penetration of the adoption of some of the solutions that are currently available in the market. So if somebody is able to afford, somebody is able to get financing is available, and you need to mount solar panels on your roof, and you do not live in your own apartment, your own house, and your landlord has refused for you to put those assets on top, it's practically impossible to scale and to get the sort of access that we're speaking about. But today, there is financing available for solar home systems. Like I said before, there's financing available with Sterling for even commercial and industrial installations. And there's financing available even at the least end of the market, through our agency banking solutions. Again, if you could work with us directly or work with vendors like Arnergy, who are experienced and who are well established with nationwide coverage in the market, to get the right kind of financing that is available. Just to wrap up on the sort of different offerings that are even available in three levels. So for consumers, can buy outrightly if you want, which is a way of financing, self-finance. External finance would include the lease to own. So if you want a lease facility or a short-term loan or a medium-term loan, like I said before, you could get between 3 to 4 years in some cases, depending on the capacity that you are acquiring. That's available, in which case it's a pure loan. You acquire with finance, maintenance, insurance, and all of that will be at your cost or at the cost of the end user. And after you make the full payment of the agreed loan, the asset belongs to you. The third alternative is the power as a service, which again, because we understand and appreciate the fact that a lot of people, for example, by virtue of you not living in your apartment, you do not want a situation where you're unable to move, even though these assets are mobile. They can be plugged and unplugged, or unplugged and plugged in a different location. But for different reasons, there are people who just say, look, all I need is energy. I do not wish to own the asset. this offering, this financing offering, which is power as a service, is very suitable for you. In which case, the burden of ownership, the burden of maintenance, the burden of insurance, installation, all of that is with the financiers, right? All you need to do is you sign a short contract, we agree a fixed amount of energy charge per month, and then you begin to enjoy power. And the day you either run to the end of your contract or you think you do not want to be in the contract again, we terminate the contract, the asset is taken back by the financier and given to a different person, you know. So these are the various sorts of financing that are currently available in the market today. One other thing this is speaking to commercial and industrial installations now, or even mini grid that we're also, you know, interested in financing. What we have seen as part of the impediment is, and I think some of the earlier questions address this, our people need to learn and to be tutored in the way business plans are put together. Because if the business model or the business case is not strong enough, it's going to be difficult to get financing for it. Let me give an example. We've seen people like to develop mini grids systems or projects, but without, say, an anchor tenant or an anchor client, it's difficult to sort of assure or to mitigate the risk of repayment or the risk of revenue generation. Again, if you recall, I started by sort of preaching against subsidy, even though at the portfolio level, we work with partners globally to procure and make sure that portfolio guarantees are available to guard against default. But the truth is, that's not where we want to be. Where we really want to be is we want every project to be self-sustaining. We want every project to have its own commercial viability. We work with some of our clients to help them guide them in building their business model and business case. But it's best done when the business owners themselves are sat down. So if you're building, say, a 1 megawatt mini grid solution, for example, this should be centered around, you know, clusters of productive users so that you have at least a minimum amount of, you know, anchor clients that guarantee between 30 to 50% of revenues. And then the remaining speculative 50%, risk can be taken on that, you know. All of this come together in making business cases more bankable and to enhance their feasibility in getting access or cheaper or more direct access to financing. I think I'd like to hold my thought here so that I don't go beyond the 15 minutes that have been allotted to me. And I believe that other insights will be given as questions are being addressed. Thank you very much for your time and attention, everyone.
Thank you so much, Daly, for the presentation. It was so insightful, and really appreciate you giving us your time today to come and speak to us about this. And like you mentioned, we already have questions for you, and we'll just go right into the first question. So the first question is from Raymond, and it says, what's the collateral for such loans from Sterling Bank?
Thank you very much, Raymond. And I mentioned that when I was speaking earlier. So today, if our renewable energy lending framework, we do not ask for collateral outside of the assets that we're financing. The only time collateral such as mortgages will come in is if we are financing a mini grid development, of course, naturally cited on a real estate. We want to be sure that there won't be any sort of dispute or legal impediment around the location. You know, so the better if the asset, the land, is owned by the project sponsors, and if it's on a long lease, of course, it should be such that, you know, the interest can be charged to the bank. Again, this is protecting the interests of both the project developers and the lenders. But beyond that, if it is basic solar home systems, the equipment will constitute the collateral, in addition to the comprehensive insurance that we take and any other type of insurances that we take or guarantees that we take on such loans. No external collateral required. I hope that is satisfactory to your question.
I want to believe that was pretty straightforward. Thank you very much, Daly, for that. The next question is, please, what is Sterling's current interest, maybe range and tenor for C and I solar projects? I don't know if you mentioned this specifically, I missed it.
I did, thank you, but I will speak to that again. So today, our interest rate range is between 16 and 18% per annum. Okay, and if you are familiar with the commercial type lending in our environment today, you will know that that is extremely concessional. Again, for those who are financial market savvy, you know the interest rates are climbing rapidly back up now. You know, so but today that's the range, and that range depends on whether you can get 16 or 17 or 18. Will depend largely on the amount of equity that you bring into the transaction, into the project. You know, I think the other question is around the tenor. So like I said before, our tenor, you can get all the way to 5 years for commercial and industrial installations or systems. Again, depending on your credit rating, depending on the project viability, but we have a lending framework that allows us to go all the way to 5 years for such projects today. And in some cases, if the financial sponsors are quite strong, on an exceptional basis, we could go up to 7 years, actually.
Okay.
Again,
Thank you
I
very
hope
much.
that addresses the previous question.
So please, if Daily has answered your question, just type in yes so that we can acknowledge that and we don't leave anything unturned or unanswered. Thank you so much, Daily, for that contribution. So the next question is from Victor, and Victor says, thank you very much. Thank you for your presentation, Daily. As you mentioned, there has been a fundamental transition into green financing. JP Morgan recently committed $2.5 trillion into sustainable financing over the next decade. How soon do you think banks in Nigeria will jump on this moving train and commit massively into green financing like their global counterparts, bearing in mind that oil is the major revenue source for the country and the government is very bullish on oil?
Thank you very much. I think that's where I started my conversation from, in terms of just a summary of what the global outlook is and the trends that we have seen. And you're right, Victor, that there's massive global capital chasing after sustainable financing and renewables generally, which is why I said as a nation, we have to get on this train. But the truth of the matter is that this has got to be mostly private sector led. And that's why in Sterling Bank, we're leading that conversation, working with companies like Arnergy and various other institutional partners to ensure that we lead the conversation, we lead policy advocacy, and we're speaking to our colleagues. This same question comes to me every single time I have the opportunity to either grant an interview or participate in forums like this. The truth is, we in Sterling took a conscious and strategic decision to be in this space because we understand it, because we sort of look into the future on a number of things that we do. But we're getting questions every day from our colleagues across the industry. We're open-minded, we're open-door, policy in terms of engaging and creating more awareness for our colleagues and sort of, sharing knowledge. We sometime last year before COVID, we had created a platform that actually allowed us to have, knowledge sharing sessions with other banks. In as much as we are a private sector company focused on revenue, we think that partnerships and collaboration is a key to unlocking this sector for everyone. So as long as it is private sector driven, government will only come along, right? And if you recall what I said at the beginning, I said, once global capital begins to move in a particular direction, once the global ecosystem begins to change and the structure begins to change, and there is no capital going into crude oil again, well, it's not going to dry up in one day. It doesn't happen in one day. It's a gradual process. But from the trend that we see with the net zero conversation going on with Europe and the rest of the world trying to withdraw financing, I think it's only a matter of time that our government will also begin to see. And I think the government is also trying to do something in this regard already. For those who know, the Solar Power Nigeria project is a renewables project to drive electricity access for most Nigerians. I hope that was satisfactory for your question, Victor.
Victor, can you please type in the chat box if that is fine? So the next, should I say question, or that might lead to like a conversation, is from an anonymous attendee. Okay, so it says, contrary to what Mr. Daly said about alternatives not being cheaper, the reality is that to the end user, these alternatives are actually cheaper based on the initial cost required to own a solar system. A practical example is a client getting a quotation of 10 million naira for a 15 kVA solar system. The client goes ahead to tell you that he can get 10 kVA generator for 40% of that cost and does not need to part ways with the huge amount at once. Let's also consider that every 4 to 5 years, batteries need to be changed. To the customers, solar is not entirely maintenance free.
Okay, I like that debate, which is why I took my time to explain that. So we can look at, as an economist, we can dimension this a little differently, right? So there is the entry cost, which is the nominal cost, and I understand the fact that within our own socio-economic environment in Nigeria, particularly, acquisition costs are very important. Why? Because generally speaking, right, income levels are low. So when income levels are low, people tend to gravitate towards things that are easier for them to acquire. There is limited attention paid to the long-term cost, which in this case would be the real cost. I've already tried to itemize some of those costs, and I'm not suggesting that solar solutions are 100% maintenance free, but I'm saying to you that in the actual sense of it, the gap between the cost of acquisition of alternatives, let's say generators that we're all familiar with, and a solar home system, that gap is coming together by what we see today with the gradual withdrawal of subsidies on all the products and all these alternatives. That is number one. So no matter how much the solar system is not maintenance free, it's going to be very hard to compare the cost of maintenance over time with what is going to cost you to maintain your 10 or 15 kVA diesel generator over the same time horizon. And I'm not speaking to diesel alone, I'm speaking to parts, I'm speaking to what you've got to pay your generator mechanic who comes in on a monthly basis. Remember that you hardly turn on your diesel generator 24/7. If you turn on your diesel generator 24/7, because that is actually what the right comparison has to be, apple for apple. Because if you've got a solar home system that works for you 24/7 with a strong enough storage bank, right? If you compare the energy access you get from your 10-15 kVA diesel generator 24/7, the cost of diesel alone within 12 months, I mean, we can run the numbers, and I'm sure the person, though anonymous, who posted that comment, you can begin to run the number to see whether truly, a solar home system even in 12 months will not be better for you economically than buying a 15 kVA diesel power generator if you require 24/7 electricity that your solar home system is going to give you. And I'm not spoken to cost of maintenance and parts, feel free, if possible, if it's a commercial environment, and so on. And of course, replacement, because if you run your diesel generator for 24 hours, I bet within 2 years, you may have to replace, the engine. So this is why I was speaking from that nominal plus alternative opportunity cost and maintenance cost over a time as, not being so much expensive or more expensive than what we are all used to. And I've not even mentioned the fact, or to remind you, that if NERC, that's the Nigerian Electricity Regulatory Commission, is going to do what is required to do to make the cost of power from the grid, for example, market or cost reflective, it's not where we are today. It's going to be multiples of that. And we're going to get to that place very soon. And then I think at that point, everybody will see clearly that, wait, I rather just get my solar home system. Even if it doesn't power everything in my home today, I can be 50 to 75% off grid and have nothing to do with my petrol or diesel generator anymore. I decided to spend a little more time on that because that psyche is a major impediment, stronger than financing actually, that we have seen in the market today. Thank you very much.
Thank you very much, Dele, for the response. I would like to add a bit in terms from Arnergy's perspective as well. And based off of the fact that the person mentioned that you need to change your battery between 4 to 5 years. So looking at that, that's one of the major constraints you find with the regular solar systems you find across Nigeria. But what Arnergy has done is we're making use of lithium-ion battery, and our battery lifespan is 10 years. So you don't need to change your, like Ujunwa also mentioned, technology is improving. So that's one thing Arnergy is capitalizing on, to make use of the latest technology where you don't have to spend so much. And if you look at the Arnergy system as well, there's a 5-year warranty on it. So even if you have any issue, the initial cost Arnergy has put in for you covers your warranty for 5 years, and we still do constant maintenance for you, which is part of your initial cost as well. So I think Arnergy has played a major role in trying to think like the end user and trying to provide something readily available for the end user. And with partnerships with Sterling Banks and Grace and Ujunwa, Arnergy is trying as much as possible to provide financial partners for you where you don't have to pay the lump sum at once. They help you provide a plan, and you pay this over a period of time so that it doesn't provide much stress on you. And again, the noise pollution is cancelled compared to, because we've not really mentioned the noise pollution part of the diesel generator and other generators here. But that's just Arnergy's perspective on this particular, should I say, conversation. So I will go into the next question now. The question is from John from Kenya. Thank you so much, John, for joining us. And John is, what is the minimum capacity for C&I projects in terms of megawatts?
Okay, thank you very much, John. I think it'd be nice to sort of put this question in context. I do not fully understand what that means, but if it is from a financing standpoint, I do not think there's any limit on the size or capacity of the installation to be financed. If there are regulations, I know for gas-fired power plants, for example, if you're going beyond a 1 megawatt project, you need to get some NEC permits, right? But for renewables, I'm not sure that regulation has delved into that domain. And if there is any such regulatory or policy constraint, we can work with the developers. We've got very strong relationships with some of the regulatory agencies, REA and the rest of them, to ensure that whatever is required is taken care of. But certainly for projects that require regulatory intervention or permits, it is a requirement for the right kind of financing to come into place. But in Sterling, we have strong enough relationships to be able to leverage on and solve those kind of problems.
Thank you very much, Dele. He actually said for it to be economically viable for, I think, Sterling Bank, and I think you've touched on that as well with your partnerships with regulators and should I say industry experts as well. So thank you so much for the response. I would the previous question you answered for Victor. Victor has come back to say, yes, your answer was fine. Thank you for your answer. The hope is that the pace in transition in the country will be very swift, thereby preventing us from lagging behind once again. And yes, private sector involvement is very necessary, although this requires an enabling environment by the policymakers, which can be seen in various developed economies that are very committed to net zero targets. So thank you very much, Victor, for the response. Moving on with questions, I think there are loads of questions for Dele, and a few people have asked that, is it possible for you to drop your email address for them to contact you later? I don't know if you want to respond to that now.
Absolutely, I'll be very happy to leave my contact and those of my colleagues in the chat box. We'll be very happy to take your inquiries and to attend to your needs.
Okay, thank you so much. Thank you so much for joining. So there's a particular question here from Emmanuel, and it says, so if it is an estate, it implies it is solar mini grid. Would you go through the developer or through the Estate Development Association?
I'm not quite sure I understand the question, but if I can make an attempt to address the way I understand it, is there are real estate developers today who are actually ensuring that they build their power solution with the real estate itself as an embedded, well, using embedded loosely, such that you can, in coming up with a development project, you can actually get a financier like Sterling to finance the energy component of the estate, right? So that is one. But if it is otherwise, maybe an existing development that needs to have, mini grid built for the residential occupiers, that's also possible. But if Emmanuel can please clarify his question, that would be useful. Or if my answers are appropriate, then I'm happy to know that as well.
Okay, thank you very much, Dele. So that we just give you a bit of break, we'll take some questions for Grace so that you can catch your breath as well and just relax a bit. So Grace, we're coming back to you with two questions. And one of the questions for Grace is, how do you segment operators for onboarding onto your programs?
Thanks for the question. So for operators specifically, we work directly with them. So we conduct our own due diligence process and always open to having conversations within the operator's data. Then once it makes sense on both sides to move forward with due diligence, then that's when we'll integrate their data via whatever means is easiest for the operator. And then we'll segment. So I guess it's a two different ways, but love to chat with kind of all operators in the space. Typically, we look for someone who's had a few years of experience, so not a brand new company, but has a bit of years of experience to point to, or if they're entering a new market, so they've worked in maybe Kenya, for example, but coming to Nigeria to start operations or another country. So happy to chat more a little bit about that, but let me know if that answers your question.
Thank you so much, Grace, for the response. I think the second question for you is, how does a small data sample size give you enough information to make the decision, considering AI requires big data?
Yeah, definitely. And so you can definitely do AI without big data in the sense of big data related to how we think of, for example, Facebook data or social media data. That's really big data. We're also able to do AI with still a good amount of training data, right? But doesn't need to be big data in the sense comparatively. And so on one hand, we have the operator data, which can be a smaller sample size, but on the geospatial population data, that's actually thousands of indicators that we can draw in, and each indicator is at the 1 square kilometer level. And so when you think about it, it's, a 1 square kilometer level across all of Nigeria is thousands and thousands of data points. And so that's where kind of the bigger piece of the data comes from, if you're thinking of scale of data. And the geospatial population data is indicators, and the piece that goes into them is actually household surveys, where the sample size of those household surveys are 40,000 respondents on average, or at least in Nigeria, per survey. And we use multiple surveys as well as satellite imagery. So definitely noted, completely agree. You need to make sure you have the right amount of data to make your outputs of AI reasonable and actually, make sense. And so that's where we draw on those different data inputs. But thanks for the question.
Thank you so much, Grace, for the response. I think that covers it as well. So we're back to you, Daily, because the questions are coming back for you. And so Emmanuel is back with a follow-up just so that we can close that part one time for all. So Emmanuel says, thank you, Daily. To clarify, to finance the complete energy component for the estate resident, is it better for the MOU to be between the developer and Sterling Bank, or between the resident association and Sterling Bank?
Okay, to finance the complete energy component, is it better for the MOU to be between the developer and Sterling? It could be tripartite depending on the structure. So this might be about structuring and documentation. So it could be bilateral between the developer and so there are two developers there, you know. So there is someone who is installing the energy system, and there is the real estate developer as well. Those two can come together to partner and then approach a financier for lending. It's also possible that the real estate developer is the same project sponsor, right? And then the person, certainly you would have, if you were selling your estate or your residential apartments off plan, it would be, one would expect that you would have built in the cost of energy into the cost of the entire, you know, system, or the entire real estate build out, you know, such that we can actually isolate where the revenue is coming from, the portion that is for energy, which is going to be played for the repayment of the debt. So again, the structuring can be, as we contemplate it, bilateral or tripartite, depending on how many parties are actually involved in the project. But regardless of the structure, we're able to finance as long as, you know, the revenue source is assured, right? In terms of, you already have off-takers and those who are buying into the residential estate, you know, from whom, of course, they will make payment for energy consumed. There are estates, there are residential estates in Lagos today that are currently doing this. You know, so the residents are not allowed to bring in generators. Energy supply is central, and, you know, is metered. You know, so for you to be able to live there, you must pay for the energy consumed, and that's isolated and paid for the project that supplies the power. Again, I hope that is useful. If not, I'll be very happy to have, you know, an ongoing conversation with Emmanuel to take that forward.
Okay, thank you so much, Daily. Just to let everyone know, Ujua had to drop off. She had another meeting she had to attend to. So what we are going to do is, because most of everyone registered for the webinar, so we have your name as it's coming into your questions, and we want to believe we have your email address that you used to register. So some of these questions will personally mail it to if we can't answer them here, we'll mail it to the panelists so that they can answer that at the end of the webinar, because we're trying to work with time, 2 hours, we're almost done for 1:30. So I will just, there are two other questions that are actually specific to Arnergy, and I would like Izini to kind of help answer those questions. And I don't know if Izini, can you please come up?
Hi, yeah, I'm here.
Okay, thank you so much. So the first question for Arnergy is, how do you overcome affordability and the ability to pay, the issue that was asked at first for Ujua as well? So how does Arnergy manage that?
Okay, so aside from the outright purchase, thanks for the question, by the way, Unity. Aside from the outright purchase, so if a customer can't afford that, the other option is the lease to own. So this option affords you the ability to pay over time. So it could be, say, 2 months, 3 months, 12 months, 24 months, 36 months, whatever is suitable for the customer at the time. The other option as well will be through our financing partners, like Dele has mentioned and Grace has mentioned as well. So it depends on the customer, what their need is and all that. So yes, we have the outright, we have the lease to own option.
Okay, thank you so much, Izini, for the response. So The next question for Arnergy is, given that renewable energy is relatively new and may have had bad experiences with quacks, what is Arnergy doing to bridge the wide knowledge and experience gap in the industry?
Right. Okay. Thank you very much. The issue of quack, like the person has said, has been. I know it's been an ongoing issue for some people, especially the early adopters. You know, they've been sort of burnt, and we totally understand that. So yeah, a couple of energies and execute a couple of activities to sort of bridge the the knowledge gap. um, so aside from the communication activities like posts on our digital platforms, blog articles, we also publish white papers, in form of impact reports to sort of break it down into what we are about, what we've done, the solutions we offer, what you're going to benefit and all that, and what we've our case studies as well. So if you go on our website, you see a lot of information out there as well. So aside that, there's also the webinar in which we are now. So this is also to provide more knowledge, bridging that gap, help you understand a bit more about what solar can do for you. So like sort of, the technology is improving, is becoming certificated every day. And Arnergy provides the cutting edge solar solution, that is clean, sustainable, and reliable, for productive use. So we also provide after sales support. So when you purchase, there's always that after sales support, to provide any questions, answers, understand how your solution is going, you're getting the required result and all that. So yes, we're always there with our customers every step of the way and by your side all through, so we never leave your side really.
Thank you very much, Izumi, for the response. I think we still have quite a few responses for daily, but there's one particular one I'll just quickly jump to, and it's from John from Kenya. And John wants to know if Sterling Bank provides this, should I say, financing to other African countries.
Sorry, could you repeat the question, please?
Yeah, so John from Kenya wants to know if the provision of finance by Sterling Bank, does it cut across to other African countries?
Okay, in terms of project located outside of Nigeria?
Yes, please.
Okay, not today, but we could take a look and see whether there are potential means of collaborating with partners. But the simple answer is that today, not yet.
Okay, thank you very much. And just to go back to one of the previous questions, and I think this one was about CBN. CBN are providing cheaper loans to commercial banks. Why is this not reflected in the bank's offerings to developers?
So the CBN lending framework, which is the 5 million solar project Nigeria solar project connections program, has its own requirements, and there are different segments to it. So you've got the upstream for those who are assembly or manufacturing, and you've got the downstream for SHS distributors and for mini grid developers. So if anybody is able to, any developer or business owner is able to scale through the requirements of the CBN on that program, they will most likely get access to financing. One key element of that program is to have been pre-qualified by the Rural Electrification Agency under the Nigeria Electrification Program, NEP. So once you go through that accreditation, then it becomes easier for you to get financing through any of the participating banks. We today are a leading collaborator with the IRA in this program. And I think for those who are interested, for businesses who are interested, The first level will be to get the accreditation, and then come to Sterling, you will get the kind of financing that are required.
Thank you very much, Daly. There's one question here. The person actually puts it in the chat box first and is now here in Q&A. And I think it's very important for you to kind of respond to this before we close. To use Sterling financing, does the customer have to have a Sterling bank account, or does it work like fintech financing apps?
Okay, so I will answer that question in two ways, and I see the question has another part to it. The first part is you don't necessarily have to be an existing customer of Sterling Bank. But I think naturally, the fact that you get a financing would make you become a customer of Sterling. As long as your project is viable, as long as there is, it's a bankable project, you can approach us, right? And as a matter of fact, we try to make a banking approach solution driven. So we wouldn't just come to you and say, come bank with me. You must have seen value, and I think this is one key value that a lot of people are seeing, are making them come over to Sterling Bank. So I think that answers the question. In terms of whether it works like the fintech, here there's a digital platform that is also being developed and is going to hit the market, in which case you can actually access financing digitally, particularly for consumer asset financing. We have a zero human intervention, the fintech financing apps. But today, because that has not hit the market on a commercial scale, you can still approach us and we will attend to your financing need. The second part of the question is, what is the down payment, the interest rate, terms and conditions for our business to use Sterling financing solutions? So, like I said before, in terms of interest rate is a range. It ranges from 16 to 18% per annum, and the range that you can get will depend on your down payment, which also ranges from 20 to 40% of the project cost. And the project cost includes not just the acquisition cost, but the deployment, installation, insurance, and I think one other element, but those are the core deployment costs. So once you're able to, depending on how much contribution you're able to make between 20 and 40%, you get further discount on the interest rate between 16 and 18% per annum. Tenor, again, depending on the size, the economic capability or financial capability, the maximum tenor today for consumer asset finance is 48 months. I'm not sure whether that is readily available in the market today, but that's what we currently offer consumer asset finance. Other terms and conditions, we can have a deep dive conversation for the specific other requirements. Mudiaga, I hope my response was satisfactory. Hello?
Hello, yes, I'm here. I'm just hoping Mudiaga would respond in the chat if that was satisfactory. But because of time, we've kind of come to the end of today's webinar. I want to try and close out early. I want to appreciate every single person for joining, the panelists.
I think he has already responded in the chat box.
Okay, all right. I can see that now. Thank you so much. I want to appreciate everyone for coming. The panelists, Grace, Dele, Unjuana upstairs, Izini, thank you so much. And for everyone that joined, we'll collate your questions. We'll send them to every single panelist with your email address that the questions you have, the remaining questions we're not able to answer. And the panelists have been very kind as well to share their contact details for you to be able to reach out to them individually as well. So like Izine mentioned, and like some of the panelists have mentioned as well, if you look at the screen now, you can see Arnergy's model of incorporating distributors, financing partners, contractors into having that solution down to the end user, the final person that will make use of it, just so that the cost and the ease of doing business is easier for the end user, because it's the value, like Ujua mentioned, that actually matters. That's the story we want to start telling from today. What value are we bringing to the market? What impact are we making in the renewable energy sector? Well, with that, we'll come to the end of this webinar today. And usually we have loads of polls we used to do, but today was really engaging. The questions were amazing. So thank you so much. If you want to reach out to Arnergy, you can see the email addresses, the contact details to reach out to Arnergy if you have any further questions. And we're located at 22A Adeleke Adedoyin Street, Victoria Island, Lagos. You might want to call us to know what the situations of things are in the office. We follow the COVID protocol. So just let us know in advance if you are coming to visit us in the office so that we can make provision for that. But you can reach out to us through email, website, social media handles, and the likes. Thank you so much, everyone, for joining. Have a wonderful day.
you